focus now will be cement and it will be metals. With Rakesh Arora, should we talk cement first or should we talk metals first? Well, I would say we should talk both. So, Rakesh, good morning. What should we start with, cement or metals?
What do you prefer, Nikunj?
They both have stories, right? I mean, suddenly there is a surge in metals, the demand trends for cement is also looking strong. So let's start with metals first. We've seen a sizable comeback in global metal prices and local metal stocks. What is leading to this optimism?
So, Nikunj, obviously, macro factors are supportive for commodity prices to go up. One is obviously we are seeing expecting rather interstate cut cycle in US, which is normally leading to weaker dollar and supportive for commodity prices. Number two is there's a lot of expectation on China's stimulus package and latest PMI data which has come across China, Eurozone, US, and even India. Everything is pointing to a multi-year high. So demand should also be very good. So this kind of environment makes a good case for commodities to really move up, and that is what the market is actually factoring in currently.
It will be similar to, let's say, what we saw post COVID, where we saw a huge uptick. The cycle sustained for at least 18 months to 24 months. Are we in that kind of a big comeback in commodities?
I don't think so. That the stimulus is going to be as strong as what we saw post COVID. It's more of a readjustment or a rebound, I would say, to a normal cycle. So my expectation is that commodities they will have an uptick, but it's not a full blown bull cycle. There are few reasons for that. One is that China is no more the same force as what it was, like a decade back. Uh, the financial efficiency, the capital efficiency in China is actually reducing. So the same amount of stimulus is not producing the same amount of demand pull, and the domestic consumption for China remains extremely weak. If you look at all the parameters in form of consumer confidence, etc., they're also at a very low level in China. So China has been producing a lot, and but they are exporting it largely to the world. And so in the first 2 months, we have seen steel exports increase by 23%. Now this is coming on back of a 6 7 year high increase, high in exports of steel last year. So already, China is exporting a lot. And as you would have been hearing that China is also creating a lot of pressure in the new age products, be it EVs or solar panels, or so the deemed export of commodities in steel is also extremely high from China. So there's a lot of disinflationary wave coming out of China. So I don't think commodity prices have the same kind of strength as we saw post COVID or pre global financial crisis. So it's more of a little bit of a rebound. I won't really put it as a bull cycle.
Uh, are we likely to see any regulatory action which could dampen the spirits of metals? When I say regulatory action, soon talk around inflation, talk around how inflationary impact could have an impact on interest rate cycle. That narrative will start again. So could that really pour cold water on this bounce?
No, I don't think commodity prices will move that much. Actually, as we speak, steel prices are at like a 2 year low or something like that. And the way iron ore and coking coal prices have fallen, I don't think steel prices have any chance to actually move up from current levels. So we are not really talking about big moves in commodity prices. So there would be 5 to 10% kind of moves at the max. So I don't see any regulatory action. Meaning, on the contrary, people were expecting, at least in India, that there would be some regulatory action to prohibit cheaper imports out of China. But that again, I don't see happening anytime soon. So I think regulatory wise, I really don't see any major action.
Segment that I wanted to talk about, Rakesh, was cement. And it seems that after 5 months of price cuts, the cycle is finally turning around to an uptick in prices. Does it seem like sustainable, though, this price hike?
We'll see. You have to look at the reasons why prices went down, and the reason is that the top two biggies, which is Ultratech and Adani Cement, rather Ambuja and ACC, they've been fighting it out on the market share, and they've been pushing volumes very aggressively. And prices and volumes never really go hand to hand in cement industry. So until unless that mindset changes, these bounces will be limited. So we have seen sharp fall in cement prices largely in South India and East India, and so much so that a lot of smaller companies would have become loss making. So this rebound is a natural phenomenon because you've gone so low, you are jumping up. But will it sustain? That depends on the how the top two players behave in terms of market share war, etc. I don't see that changing immediately. So probably there would be a little bit of bounce, but I don't think it will go the whole way. People are expecting that we'll do 1400-1500 rupees per ton margin. I think we are back to 1000 rupee level now.
If you have to bet in the cement sector, would you bet on Ultratech, which has got size and reach? Would you bet on ACC Ambuja, which is big, and there is case for synergies, cost benefits to kick in after the change of guard? Or would you bet on a regional player, which is more like a cyclical bet?
So, Nikhil, there are two players here. One is companies who are growing, and those are the guys who would continue to deliver sustainable, returns. So both Ultratech, Ambuja, ACC, and even some of the other names like Shri, Dalmia fall into that category. These are the biggies who will continue to grow and gain market share. So somebody looking to invest, this is the basket. The second basket is, there would be a lot of consolidation happening in the coming year post elections, I think, because given the way cement prices have fallen and, given the way these guys are looking to gain market share, I think some of the smaller players will be taken out. So that would be the other basket which one can look to play. But please, I think I will remind investors to note that valuations are unlikely to be anywhere north of 85 $90. So be cognizant of that. It's not that they're going to pay top dollar to acquire these capacities.
Right. Okay. Rakesh, great to then have you on the show. Thank you so much for taking the time out and giving us a color on where you think both metals as well as cement as a commodity is headed.
Thank you.
If you like this video, then like, share and subscribe to ET Now.